Today we're talking about a relatively new cryptocurrency called Goldfinch. Goldfinch is a real-world asset crypto, and before we dive into the fundamentals, make sure to leave a like and subscribe as it helps out a ton. Now, let's dive straight in. Now, Goldfinch allows for crypto credit borrowing, but instead of crypto collateral, the loans are backed and collateralized off the chain. That essentially means you can borrow USDC and collateralize your income or other assets like a property you own, for example. There's three key roles that go into the Goldfinch's network, and those are the investors, backers, and liquidity providers. The investors, these are the people who provide USDC, which is a type of digital currency, to Goldfinch. They can use their funds to help borrowers get the money that they need. Then we have the backers. They look at different borrower pools, which are groups of loans, and they choose which ones to fund with their own money. They get higher returns, but they do take on a much higher risk. Then we have the liquidity providers. They spread their money across many borrower pools to reduce risk. Their money helps cover losses in the pools if needed. Then we have the three different types of stakeholders. Now these are the members, borrowers, and auditors. The members, these are the people who give capital and Goldfinch's token, the GFI, to support the growth and safety of the network. They receive rewards for their contributions. Then the borrowers, these are the individuals or companies that need money. They set up borrower pools, which are like contracts that outline the terms of their loans, such as interest rates and how they will pay their money back. Finally, we have the auditors, which are probably one of the most important roles in the Goldfinch network. Their job is to check on borrowers and to make sure that they are trustworthy before they are allowed to receive investments. Auditors are chosen randomly by the system and are rewarded for their work. Now here's how the Goldfinch network works. Borrowers are usually businesses that need loans. They suggest the terms for conditions of their loans, which are grouped into something called borrower pools. Then they have the investors. These are people or groups who can provide the money for the borrowers, and they can either invest directly in specific borrower pools as backers or provide money to a general fund known as the senior pool, which then distributes this money across various borrower pools as needed. And this is done through liquidity providers. Then the use of funds comes down to the borrower. The borrower's business takes the cryptocurrency they get, called USDC, and change it into their local currency. Then they use this money to operate and expand their business in their local areas. Next, we move into the Goldfinch's investors. So they've done 5 total funding rounds, and they've received a total of nearly $40 million in funding from 25 investors and 1 lead investor. And you can see here their latest funding round was in 2022. They did a Series A funding round where they raised $25 million. Now they had various investors, but the main one here was Coinbase Ventures. And again, Coinbase is one of the largest, if not the largest, USA crypto exchange. And this is their venture platform where they invest into various different crypto projects. Then they had a second round. They've done multiple rounds, but their second biggest round was in May of 2021, where they raised nearly $12 million, and again a Series A funding round. The biggest investor here, or one of the main investors here, was Balaji. So Balaji is a renowned investor. He's huge in tech, huge in crypto. He's been in the crypto space for a very long time, as you can see here. In 2013, Balaji co-founded 21E6, which later became 21 Incorporated, a Bitcoin mining startup raising over $120 million from investors. The company unfortunately failed as Bitcoin mining businesses and pivoted to become earn.com, which allowed senders to pay users in cryptocurrency to reply to emails. So even though his first initial company failed as a Bitcoin mining startup, Balaji still knows how the crypto space works. You know, people learn best from their failures. Balaji started very early on in 2013, and then after his first failure, he launched a successful company called earn.com. So Balaji knows how to pivot. He knows how to invest in good crypto projects. He knows the market very well. He knows what's new, what's going to last, and what won't. The third biggest round was a venture series unknown. They raised $1 million in 2021. And again here, we see Coinbase Ventures invested again. Now Coinbase invested multiple times out of all of their funding rounds. I think it was only 1 or 2 that they didn't invest in. So Coinbase has been investing in Goldfinch for a very long time, which is a very, very good sign for holders and people that want to buy into Goldfinch. Now let's take a look at the chart. Okay, so if we take a look at the chart, we can see that GFI moves in these intervals of accumulation, pump, distribution, accumulation, pump, slight distribution, and now again we're looking to find the accumulation zone. The one way I quite like to do it is using the Fibonacci tool. So you'll see I've plopped on 2 Fibonacci's, one for the short term to determine a few of our take profits and just overall support and resistance levels, and another one from the long term, which I took from the low to the high, as you can see here in blue, to find our distinct accumulation point. Now you'll see here that it ended up working quite well, because after this initial pump we distributed, fell back down and fell straight into this golden pocket, also known as the accumulation, or depending on the way you draw it out, can also be a sell zone. We ended up dropping all the way down into this level perfectly and then saw a nice spike up. So the key level that I'd be looking to accumulate most of my GFI is going to be in this level. Now again, it's not mandatory for GFI to move back into this level. We can just consolidate a bit longer for here before we end up pumping through these resistance levels all the way to our take profits way above. So the key strategy I like to do is DCA. Now DCAing does mean you'll have to split up your capital. So if you have $1,000 for example, you'll want to split up a few $100s here and then a few $100s here, and lower if you think it will go lower. That's essentially how DCAing works. Now I use a slightly more specific strategy for DCAing. So say for example I'll DCA $100 here. I like to double down at the lower level. So here I do, can I edit like this? I can. So here I'll try and DCA $200. That way my entry gets way better and my average entry price will drop significantly compared to if I just do $100 here. Again, because I'm adding larger capital and I'm getting more coins because the price is way lower. So that's a strategy that I like to do. And again, we can accumulate here because it's not significantly higher than this zone. So it's not like we're getting a stupid price for GFI. We're going to be getting a reasonable price at this level. Now the next thing we have to look at is the resistance level. So GFI here created a new high, slightly drawn wrong, but here it created a new high at around $4.60. So this is going to be the key level to break before we go slightly higher, and again $4.80. So this range right here is going to be quite significant, and then I believe the $6 will be quite easy to break because it wasn't, we didn't consolidate at all at this level. So the key thing I'd be looking to do is accumulate here. If we drop down to here, accumulate there also, using our DCA strategy. And then if you're looking for any short-term trades, I'd suggest being really specific. Maybe you want to wait for a sweep of these lows, enter something like this, take profits like here. And again, like a short-term trade, you don't even have to really use leverage for this. You can enter purely on spot because the traders will be significant. It will be a 90% increase from this level. So if you want to look for a short-term trade, that is a viable option as well. But for the purpose of this video, I'm going to be looking at a longer-term trade. We're looking to accumulate and sell way higher during the bull run. Now for our targets, again, I'm going to be using the Fibonacci. The Fibonacci extends to around $17.60. So from the current market price, it's around a 350% increase. Now, I don't think Coinbase, from the fundamentals who invested into GFI and the other investors are looking for a 350% increase. Usually they look for much larger multipliers than a 3.9x or a 4x or a 5x. They're looking for usually double-digit multipliers. So again, they did get in at an earlier price, so maybe they are already at 5x, and being at $17 would be their 10x. However, we need to find a price target that would justify our means. So if you're happy with $17.60, then I'd suggest selling there. But if you're not, the price targets that I'd be looking for would be, again, the main issue with GFI is there's not going to be any significant resistance levels from the previous bull run or previous cycles, because it is a relatively new coin. It launched in 2022, just after the bull run, and that's why we saw a huge decrease. It just consolidated for a very long time under $1 before having this run up now. Finding any sort of sell point not using the Fibonacci is going to be difficult. After we break through the $17.6 level, it will become slightly easier, because we'll be able to see how price is slowing down, how the community is growing, how the investors are doing. Are they selling? Are they buying? Are they holding? The momentum that GFI has, the momentum Bitcoin even has, the momentum that Bitcoin dominance has, and so on and so forth. But nevertheless, I'd probably be looking in the range of around $30 to $45 for GFI, in the best case scenario, something like this. This is the best case scenario. If you're on the more conservative side, again, use these Fibonacci areas. We can sell at 8.3, 11, 90, 15, even 17. And even then, it's still a good 4x trade. You enter with 1,000, you leave with 4,000. The SPX index returns 10% annually. If you can get, a 4x from this one coin, then brilliant. So just to quickly recap, we are looking to accumulate with a little amount in this area, with hopefully, if you have the capital, double the amount in this area in the golden pocket. And then if you're looking for a short-term trade, what you can do is set some limit orders here at around $2.51, a sweep of these lows, and targets of even up to this level for 90% gains. Stop losses probably just below these highs, somewhere like this, 14% loss. So 6.4 risk to reward ratio, and you don't even really need to use leverage for this trade. Then the long-term price targets are going to be $15 to $17.6, and if you're really optimistic and after we break through these levels you still haven't sold, look at around $30 to $45 for GFI. Nevertheless, thank you all for watching. If you did enjoy, make sure to like and subscribe, it would help out a ton. I will see you all in the next video. Goodbye guys.